welcome to this special edition of the Market Share. I'm Paul Gifford, Chief Investment Officer with First Source Bank. Joining me today is our special guest, David Miller. David is a licensed insurance rep with First Source Insurance Agency. David, a lot of our videos, we talk about economic data and inflation being a big part of what consumers are experiencing. One of those areas that seems to have really had a lot of inflation is the insurance markets. So can you talk about what's been changing in the insurance market the last couple of years?
Sure, absolutely. It's been challenging, not just for carriers, our agency, but also for customers, as we've experienced what's called a hard market. And it's kind of the perfect storm, Paul. It's a combination of catastrophic issues, severe weather, rising house prices, and a continuing increased cost to repair. And honestly, it takes a lot longer to repair than it has in the past.
So what are the insurance carriers doing to offset these higher costs?
So at our First Source Insurance Agency, we are an independent agency. We deal with many carriers. In fact, my department has 15 carriers that we have relationships with. That allows us to look for the right option and right choices for people. But what we're seeing across the board are similar ways to contend with these increased costs. The first one has to do with your roof. A lot of carriers are scheduling a decreased amount that they're going to cover your roof for as your roof gets older. Some carriers are going to a depreciated value or actual cash value. And there are carriers who are saying, if your roof's X amount or older, we're just not going to insure the home. On top of that, there's increased deductibles. Some carriers are looking at that from a standpoint of a percentage. So if your house was insured for $300,000, 1% deductible, you're on the hook for the first $300 or $3,000 of that claim. Others are separating storm-related losses to other claims, like fire, and they're giving a higher deductible for a storm-related loss. On top of that, stricter underwriting. There's more requirements from the customer side in order to get insurance. There's more restrictions within the insurance and exclusions, and some carriers are just stepping out of the industry in certain pockets or altogether because they can't handle the financial stress of it.
That really is a hard market because I think that's about every lever an insurance company could pull, you just explained. So what is First Source Insurance doing to make sure that consumers are still protected even with all these changes going on?
Well, one response we've had is to increase the number of carriers we're doing business with. In the last few months, we've actually started relationships with 4 new carriers. What that does is gives us more options and make sure that we can find the right coverage for our customers. The second thing is we are really focused on education and certifications. Over half of our agents in our agency are going through some sort of certification class to understand the policy better, the customer better, and how we're going to protect them. Last, we have some agency standards that are above what state standards are. So one example of that is we write our homes with replacement cost. And a story from last year, we had a referral come in from our mortgage department. The mortgage was less than $60,000. But as we saw the cost of rebuilding that home, we insured it for over $240,000. Sadly, less than 6 months later, there was a house fire. The house burnt down. Now, had we only insured the home for the mortgage amount, that family would be homeless. But we are actively rebuilding and putting them back and making them whole. Paul, I think it's fair to say that getting the right coverage was really good investment for this family.
Yeah, I can't turn $60,000 into $240,000 in 6 months. Now, that's a terrible way to do it. We don't recommend that.
Let's not burn houses down.
We don't recommend that at all. Obviously, part of this equation is not only what insurers can do, but what, as consumers, must we be doing to look at our insurance policies?
Well, I think we all have our own responsibility within it. So the first thing I would recommend is open your mail, open your email. Carriers are communicating these changes to you on a regular basis. If you haven't sat down with a trusted agent in the last couple of years, it's probably time to set that appointment. And if you have questions beyond that, feel free to contact our department, First Source Insurance, and we'll give you straight talk and sound advice.
Just like First Source always does. I actually took the opportunity and opened my mail this summer on my policies because I've talked to you guys enough. And yeah, my roof coverage changed dramatically. I have a roof that's 11 years old and I'm not getting full replacement value anymore. So it is good to look through that mail. David, really appreciate your insights. I think our viewers will really appreciate the conversation about insurance. If you enjoyed today's video, I encourage you to share that with your friends or family. And if you do not currently subscribe to the Market Share, you can do so using the QR code at the end of the video or sending an email to wealthadvisory@firstsource.com. And as always, we appreciate the opportunity to serve you and your family, and have a great day.